Rohan turns it off. So I'll do that again. Good afternoon, Zinger Nation. This is Jason Raznick coming to you live from Detroit Benzinga headquarters. Luke is on a phone call. He'll be joining us at 12:30. Today's a day where the market is down, and I don't know if you're hurting or you're protected, but we're going to wait a few minutes because Aaron Bry has to get the feed up on the web because right now I see there's 10 people watching. So I'm basically talking to myself, and that's not that fun. I can talk to more people at the Benzinga office than just talking to 10 people. So let's wait for some people to join in, and I'll tell you what I'm trading. How I'm trying to help Aaron Bree not spend all his money on this stuff. And we'll go from there. So it looks like the SPAC show is still on, so they haven't sent people over yet. So we have to wait a little bit, I guess. Or is Aaron going to send them over? I don't know. Aaron, are you awake? Aaron,
yes, sir.
Awake? So are you?
I'm telling Mitch to wrap it up right now, so we get all there, guys.
Well, how are they going to get them? Like, how do they know to come over here?
It's set to automatically redirect from that stream to this one.
So why don't you just go on Mitch's show right now and say something?
All right, I'll do that.
You're afraid?
No, that's a good idea. I'll do that right now.
All right, we're counting. All right, will Aaron do it? He's still in this room, so he's not.
Pop into SPAC attacks to see me make a guest appearance.
Yeah, do it. Go. Are you doing it? Go ahead.
Yep. Hold on. I got to get out.
All right, Aaron's going to go make a guest appearance. All right, guys. So as you guys know, I've been trading, hedging, doing all different things. Yeah, I wish I would have sold more Tesla at 780, but I've sold a decent amount. It's less than 30% of my portfolio now, but this is the first time that I have not been on margin in the stock market in a long time. I'm not on margin, so that is the first time in a long time. So hope you guys are watching your positions. The Alex Cutler people love PLTR. I'm not sure why PLTR is so popular, but I guess they have some software tools that seem exciting. So yeah, I think I would go into PLTR. Let me put this on as we get we don't have a chat challenge right now. We have some guests coming on, but hold on one second. Let me do this. I'm bouncing. I mean, that music was hot. That was awesome. If that doesn't wake you up, let's play that for the whole stock market and see if we can turn the stock market around today. I mean, that is some serious music. You guys pumped up from that? I don't know. I know I am. Let me go to my brokerage account real quick, show you what we got. Here we go. How you guys doing today? You staying alive in this market? Show you my account in a second. I'll share my trades, show you what I'm doing. I know Chris always asks for my trades. So Chris, you're going to get them all right now. I'm going to show the portfolio. I'm going to show, even though Jordan gets mad when I show them, but I'm going to. I don't care. She can say, don't show, but I will. 1 second, guys. Aaron Bree was supposed to be in the other room. All right, here we go. Let's go to the account. These are call puts. All right, let me share my screen. All right. Where did Aaron Bree bring the people over? I don't know. So here we go. All right. Here we go. All right, here's my Tesla trading for the last few months. So in March, I was selling 635s, 703, 701, 700s, small amounts. As you guys can see, I sold another 3 shares at 731. I sold 3 shares, at 611. I had 1,000 shares. I have like 530 left. I just keep selling in increments because the tax, and I should hedge with options. I should hedge with options. I'm not an expert at options like Luke is. Luke is better at options than I am. And so the reason I sell such little amounts is because I don't want all the capital gains. I bought a Tesla like at $20. And so that's that. That's what I've been selling. Now I can also go to my, hey, I can hear you, Bree. What do you want to say?
I just was interested what you were looking at Tesla because I had to hop in late.
Yeah, but did you go on the thing?
I did, yeah. I gave them the little alarm clock. They wrapped up, and now we got some of their viewers over here.
You think so?
No, I know so.
You positive?
100%.
Okay. All right. I'm just giving people a little stuff on what I've been doing. All right. So look, guys, April 20th, even before that, we can go for it. But look at my orders. Look at all the sell orders, guys. You see all these sells that I'm doing over the time? Here, let's go before April 20th. Let's go even before. Okay. April 17th. Look at the difference, guys. Okay, I want you guys to understand what I'm trying to show you here. When the market trends weren't in our favor and slowed down, I became a net seller. Whereas before, I was a net buyer. And we're going to see that very simply by going next. Now, I have mistakes just like anyone else, right? But I try to play the trends into my patterns. So we're going all the way back. All right, here we are. So we're at trying to get to January is what I'm trying to get to. All right, we're at the end of February. Okay. So if you notice, hold on. If you go, I mean, it must be December where I have a lot more of these buys. Yeah, so if you start seeing, you see the buys and the sells mixed. Like I'm buying, I'm selling, I'm buying and selling. You'll start seeing in March where I'm just selling. I'm literally just intermittently selling. See all the buys here? See this stuff? ENG. See these stocks? ESTC. Office Depot. That's a good question. I wonder what Office Depot is at. ODP, GHIV, 500 shares a pen. You couldn't go wrong. But when the trend stopped becoming my friend, I switched my strategy. I switched and I started selling. I still have a lot of stocks. Don't get me wrong. Like I still have a lot of stocks. You guys can see that. Hold on. No, I lost everything. E-Trade's bailing out of me. Hey, if you're a Robinhood user, press 1. Robinhood user, press 1. I need a favor from you guys today. We're gonna go back to my stocks. All right. So I sold. Let's go to DraftKings. Let's go back to DraftKings. So we have no Robinhood users. Interesting. I thought we would. Okay. So DraftKings, I sold 100 shares, 54. Delta, I sold 100 shares. It wasn't going my way, so I just took stuff off. I sold Harley Davidson, Jets, STKS. I still own a lot of it, but here's where I'm at. Look at all these sells over the last, 2 months. Okay, Robinhood users, I'm putting a call out to you guys in 1 second. Thank you guys. 1 second. HOFV, Hall of Fame Resorts. I mean, just look at this. The trend's not my friend. Now, I will start buying again when I see some more capitulation or more intermittent selling happens. So now you guys can see my day gain, and this is what I still have of my account. Here we go. It's down 10,000. So Upwork's 3% of my account. Here, I'll make it bigger. Sorry, guys. Okay. Here we go. So Amazon, I don't really trade Amazon. I just keep it. I mean, I should have probably bought more shares when it went down, but Twilio, US Steel. One of you guys in ZingerNation got me in US Steel. So thank you. ZingerNation, I love you. Thank you for
What
getting
was the price on Amazon when you originally got in?
$5.40.
$5.40, right?
No,
No.
I sold it $7.10.
Oh.
I bought it back at $540, sir.
Oh, I was talking about your initial trade, the one that you have the paper slip of still.
I do have the paper slip still. I sold it at $7.
But do you remember what you bought in before you sold it at $7?
I don't know, like $25 probably.
Oh, so you sold it for a loss then?
Yes, it was the only stock back in 2000 that still had value. And so I sold $7 at $2,300 worth. If I would never have sold a share, that'd be worth $2.1 million today, mister.
Wow. Oh,
Yeah.
look, it's Jim Stocks and ZingerNation is saying he's the one that gave us the call on X.
Yep, it's true. It's true, Aaron. It's true. And you know what sucks for a lot of people today? When the market's down like this, they don't want to see their account. They don't want to look at it. They're scared, and I understand because you don't want to be, forced to make any decisions you don't want to. But just hang in there. I mean, it's not these. Just find the companies you like. So Win Casino, I'll probably buy more shares of it. I'll probably increase. I'll buy another 20 shares, but it's up 2% today. I'm not going to buy today. Okay, Robinhood guys. What I'm asking for you guys to do is send an email to Robinhood or contact us. Say you want more Benzinga news. If you do that, send an email to powerhour@benzinga.com with your address and your size. We'll send you a Benzinga jacket. Send an email to Robinhood. Contact us that you want more Benzinga news. You love it. And then send an email to powerhour@benzinga.com and we'll send you a track jacket or t-shirt or whatever you guys want. And so here are my losers. JetBlue, I still own 6. Remember I said 6 at 60s. It's at 42. I got a long way to make that up, but I still believe in 6. So I'm keeping my 6. Peloton, I've been taking off since 96, 120. But that's what I got. And then we have some guests today. Brian, no, they do Sleek Endeavor. If you didn't get any swag, send an email to powerhour@benzinga.com and say, Aaron Thomas, where is my swag? Tell me he owes you 2 pieces of swag now. It's taking so long. Give your size, give your address. Yes, Brian, you've seen our news on Robinhood. It's just a little link out. Just trust me, Brian, please send an email. Contact us to Robinhood. It's the brokerage. Just send an email or contact us that you love Benzinga news. You'd like more of it. Send an email to them to powerhour@benzinga.com and we'll send you a jacket and a shirt. Okay. Or whatever. Just give us the size.
So I got a quick question just about like general market things. So I kept seeing some of these stocks that I like Apple, Microsoft, whatever, get hammered. And I'm like, oh, these got to come back up. And I bought these, calls that are a few months out. And they've just been getting crushed still. So obviously I'm not doing the right thing. Is there something specific that you're looking for to know, like, okay, the market's going to be back on the upswing, not as choppy as it is right now, maybe?
Yeah. What I'm looking for is a real strong day of weakness. Okay. I was hoping that would be today, but then you saw some strength a little bit ago. So it's not there yet. And so people, what they do is they're on margin. So there's intermittent selling. And I don't think all the scared money's out. So I think these stocks could still, fall a little bit further. It doesn't mean if you Apple or what have you, could it come back? Yeah, I mean that's absolutely. But we'll get more into that because we have a special guest all the way from Puerto Rico. Give me a second. He's getting set up.
So yesterday wasn't a strong enough sign of weakness.
I didn't think so. But what was it down yesterday?
I mean, NASDAQ finished down like 2.5%.
NASDAQ, but Dow was up.
Yeah, it was pretty flat.
Okay. I mean, you got to have keep your portfolio 5%. Kevin O'Leary, 20% in any sector, 5% in one stock. And then you're not going to feel the pain as much, in my opinion.
Kevin O'Leary says what, 20%?
In one sector and 5% individual in one stock. So 20%. Yeah, that's what his thing is. Okay.
I like that.
Yeah, I learned that yesterday in our interview. He told me that. It's wrong person. There we go. Peter Schiff, what's up?
Hey, not much.
Euro Pacific Capital, all the way from Puerto Rico. How you doing today?
I'm good. What's going on?
I don't know. Markets are all over. You give a good April Fool's joke to one of our guys today.
Why? I didn't do one today.
I know. This is crazy. We had a whole conversation about you. You have no idea what just happened here.
All
So
right.
Spencer Israel comes over to me and says, Peter Schiff likes Bitcoin and said he was wrong about it. And I'm like, what are you talking about, Spencer? He's like, I promise you, 200%. He said that. I go, I was just with him in Puerto Rico, and that's not the case. His son owns it, but it's not the case. He's like, I promise you, Jason. And then all of a sudden, like right before we're about to go on air, he's like, Jason, it was an April Fool's joke. I fell for it. And I'm like, no shit, Sherlock. And is that a true story?
Well, he's just falling for it now. What is it, May 10th, 11th?
I don't know. Yeah, exactly. May 10th, May 11th. He just fell for it now. And he gave me fake news. So I would have started out the interview and say, Peter, I heard you had a big change of heart on crypto and Bitcoin. And you've been like, Jason, are you high or something? And I've been like, I would have punched him.
In the April Fool's joke, I didn't actually say what about Bitcoin I was wrong about. I just said I was wrong about Bitcoin. It doesn't necessarily mean that I was wrong in my assessment of Bitcoin's viability as an asset or a currency or a form of money or anything like that.
Yeah.
But everybody just assumed that what I meant by I was wrong about Bitcoin was that, I was totally wrong. It's great. It's better than gold. People should buy it. But I never tweeted out anything like that.
Yeah, I mean you're right. I don't know. Spencer had it all wrong.
I mean, I was wrong about Bitcoin, and I didn't think that this many people would be dumb enough to buy it. So I was definitely wrong about that.
So that's how you feel. But what about your son, dude? Come on, what about your son having a piece of it?
Yeah, he's dumb enough to buy it too. He's young and dumb. He's only 18.
I got it.
Yeah, people do a lot of foolish things when they're young.
I was wrong about Bitcoin. There's the tweet. April Fool's. Since my tweet didn't specifically say what I got wrong. It was really a prank. I didn't think the bubble would get this big or that so many otherwise smart people would be foolish enough to buy it. So I was wrong about that, but right about everything else. That's good. Well, Spencer fell for it, so I loved it. Give me another chance to rip on Spencer. So what's new in Peter Schiff land? How is Euro specific? How is gold? What's new? And what they want to know. Keep going.
Our investment strategies have been doing quite well. We're benefiting from the long overdue rotation out of the hyped up momentum type stocks into more traditional value oriented companies, pay good dividends, good fundamentals, good balance sheets that you can buy, relatively cheap, both maybe on a historic basis or on an absolute basis. So that's doing well. We're starting to see money moving into the resource space, industrial materials, agriculture, oil and gas. So those are a lot of the themes we have. The emerging markets are coming to life. And in general, I think we're starting to see some outperformance of the foreign stocks versus the U.S. stock market, which favors what we're doing. I think those trends are going to accelerate as people really come to terms with the depth of the problem that they're being very dismissive of. I mean, the United States is in a serious economic problem. The Fed is papering it over with money printing. But ultimately, the real problems are going to be exposed, the way they were, with the 2008 financial crisis, only the problems now are much larger. And when they are exposed, the economic damage will be far more severe. And the government, unlike 2008, is not going to be in a position to do anything about it. They're not going to be able to bail anybody out because it's the dollar that's going to be collapsing, and all they can do is print dollars. And if people want the dollars, then it can be helpful, but they're not going to want them. And so having more dollars that people don't want isn't going to be a bailout that is going to be meaningful in any way.
So what do? They're just totally out of options?
No, I mean, they're going to keep printing money, so they're going to keep making the problem worse. But there is nothing they could do other than getting out of the way and allowing all of the damage to finally, run its course. But unfortunately, because of all the years of kicking the can down the road, they have made the problems much worse than they were a decade or two ago. And therefore, the economic pain associated with actually addressing those imbalances is going to be far greater than what would have been the case had they allowed this to happen sooner. But, the politicians, they don't care about doing the right thing. They just care about doing the expedient thing. And that's always delaying the day of reckoning, even if you make that day of reckoning far worse.
So in other words, they're kicking the can down the road. And I guess my question to you then is, they're just going to keep trying to kick the can down the road. And what you're sort of suggesting is they have fewer options because people don't want the dollar, et cetera. They have fewer options to kick the can down the road.
Yeah, I was watching this interview with Druckenmiller this morning on CNBC, and it's rare that somebody actually says anything on CNBC that makes sense at all. So at least he made a lot of valid points. But one of the things that Druckenmiller still doesn't understand is that he was talking about, hey, I understand why the Fed had to react the way they did. It was an emergency, so they had these emergency stimulus. But now the emergency is over, so why are they continuing to, pursue this emergency policy? Why are they still doing QE? Why are they still have rates at zero, even though the emergency is behind us? And he's, worried about the damage that all this excess liquidity is going to cause. And what he doesn't seem to understand is that the emergency now is that we're addicted to the emergency policy. The problem was the Fed never should have done this in the first place. It was not the proper policy in the aftermath of COVID, because it simply created a phony economy that cannot be sustained if you withdraw all the emergency monetary supports, which is why they're still there. I mean, the Fed can't allow interest rates to rise. They can't stop printing money without this whole house of cards collapsing down. So the problem was from the beginning. It's not like they did it right initially, but now they're making a mistake. They made a mistake initially, and now they have to compound those mistakes to cover up the problems caused by the original mistakes. But now all those problems are being exacerbated. And so the Fed is in a position where it can never do the right thing, because then it has to confront all the consequences of all the mistakes that it's made. So it keeps making more and more mistakes. But eventually, it can't go on forever. The market's going to catch up with the Fed, and we're going to have a dollar crisis, and the party's over.
It doesn't sound like fun.
No, I mean, it's not going to be fun for most people. It'll be very profitable for me, but I'd rather make money off of the success of the country, not off of the failure. But unfortunately, our leaders don't give me any choice.
Yeah, I hear you. So on your left shoulder, you have a book called The Real Crash that you wrote. Okay. Is that book helpful for what we're going to be about to go through in your mind?
Yeah, even though I wrote it in 2013, it was basically a follow-up on my book, Crash Proof, because after we had the 2008 financial crisis and the market collapse, many people believed that was the crash that I wrote about in my 2007 book. So I needed to remind people that the real crash is yet to come, that what we experienced in 2008 was just a warm-up. And in fact, what we experienced in 2020 early on was just a tremor. The real earthquake is the one that's coming. The real crash is the crash of the dollar. And when the dollar crashes, it takes the whole U.S. economy down with it. And again, the Fed is powerless. The government is powerless to do anything to artificially stimulate the economy. This is going to be a crisis from which there is no, a way out. We're just going to have to deal with it.
So to you, it's just a matter of time?
Yeah, and it's already been a matter of too much time. That's the problem. And so many people have gotten very complacent and, in fact, very critical of me because a lot of the dire warnings that I've given haven't materialized. But people underestimate, or they look over the fact that so many of the things that I have predicted have, in fact, happened. I mean, far more things have happened that I predicted than anybody that I know. And, a lot of the people who are in the mainstream, their predictions have been constantly wrong. I mean, the only thing they got right is that the stock market went up, but it went up for all the wrong reasons. The economy is moving in the direction that I forecast, in that the whole thing is being propped up by ever increasing monetary supports. You had a lot of people in the mainstream who believed that the Fed was going to be able to normalize interest rates and shrink their balance sheet. I said from the beginning that that was impossible to do, that the Fed could never deliver on that promise because it had created a phony economy that was addicted to the cheap money policies that it was claiming that it could withdraw. But you also forget that when everybody was so bullish leading up to the financial crisis, I was a lone voice in crying out that this was a fake bubble caused by the Fed, that housing prices were going to crash. It was going to bring in on a financial crisis. And, all those things happen. People forget about it. And I was very critical of the Fed's policy response because I knew what was going to happen. I just didn't know how long it would take to happen. And it's taking longer than I thought. But because it took longer than I thought, the crisis is going to be much worse than I thought. And we're headed right for it.
All right. I mean, it's good to hear. So how are you protecting yourself? Is it buying gold, or is it other avenues that you guys are doing at Euro? So if you guys check out epacfunds.com if you want more information what Peter Schiff's up to, epacfunds.com. So how are you protecting yourself? What are you doing?
Well, I'm pretty much in the same positions that I've been in, for the last decade, except now they're, moving up more. But I have mostly non-U.S. equities, foreign stocks. We overweight the resource sector. So we try to own businesses that will be beneficiaries of inflation and rising commodity prices. We have money in emerging markets. Of course, we have money in mining stocks, precious metals. I think gold will be a major beneficiary. There's been a little bit of a bump in the road with the distraction of Bitcoin and other cryptocurrencies. But I think they amount to nothing more than fool's gold. And I think they enjoyed their day in the sun while gold was kind of in the shadows. But gold's going to reemerge stronger than ever as the main alternative to fiat currencies in general, and the dollar in particular. And as gold really starts to shine, that's going to take the shine off of these cryptocurrencies, which are likely to crash as well.
Wow. So you think the cryptocurrencies will crash as well, even though you have like Chamath and the whole brigade in it, Mark Andreessen? You think it's just one of these things that people are just playing the Ponzi scheme, like just get it up, or pyramid scheme or whatever?
Look, you had a lot of hot money that chased the NASDAQ bubble during the 1990s. That didn't stop it from popping. The air came out and a lot of stocks went bankrupt, and even those that survived were down 80, 90%. So yeah, you always have a lot of people crowding into a bubble. That's what makes it a bubble. This one certainly got a lot bigger than I thought. Look, we just added Tom Brady into the mix the other day. He now sports the laser eyes.
I saw that.
Zuckerberg, I guess it was a joke or a riff on Tom. He claims that he has a goat named Bitcoin. I tell you, if I had a jackass, I'd name it Bitcoin. Look, I mean, the whole thing is nuts. But this is what happens when you have all this cheap money. Bubbles pop up all over the place, and of course, nobody can recognize their own bubble, right? So when you're in a bubble, you don't know it, and so it doesn't surprise me that there are so many fanatics in this cult that think I'm the one that doesn't get it. Well, they'll get it eventually, but by then it'll be too late because they will have lost their money.
And do you have this conviction, like you're saying, because you've seen this so many times, just dressed up differently each time, basically?
Well, it's not just that I've seen bubbles inflate and pop. It's that I actually understand money and what is money and what is not money. And I understand the difference between money and currency, and the difference between a fiat currency and a legitimate currency. But a lot of people that are into Bitcoin don't understand it. They know a little bit. They know just enough to get into a lot of trouble. Because if you only know half the story, then you can fall for this con. But if you really understand money and how it works, you know that Bitcoin will never be it. And so it fails at its primary mission. But other than that, I mean, it has all the hallmarks of a classic bubble in what amounts to a collectible digital token, which is all that it is. And it derives value from the fact that other people think that if they buy it, it'll go up and somebody else will pay more for it. But, you have these financial networks like CNBC that are completely taken in by it. Remember, these guys were totally fooled by the dot-com bubble, totally fooled by the housing bubble. There is no real understanding of economics or finance on that network. It is pure entertainment. I thought it was interesting that they spent so much time covering Elon Musk's appearance on Saturday Night Live, because I think CNBC is as much a financial network as Saturday Night Live. It's all entertainment. It's all comedy. They don't know what they're talking about over there. So, yeah, that's why they're so enamored by Bitcoin. And it's so easy for somebody to come on there and pump this stuff up and fool every one of their on-air anchors about what it is, because they don't understand finance. They don't understand economics. They don't understand investing. They're just there to help advertise or sell products, and they masquerade as a financial news network.
Yeah, no, I hear you. I hear you. And I have two more quick topics to get to, though. So I got to learn that there's two more topics. One you talked about in Joe Rogan. You have some interesting ideas for the inner city. Can you quickly address like how we can turn around inner cities? You had some interesting things you said on that show.
Well, I mean, I don't remember what I said on Rogan, but there's a lot of things the government could do for inner cities. One would be to end the war on drugs. I mean, that's an easy thing to do. And then get all the violence and all the crime out of those inner cities. So decriminalize drugs. I'm not just talking about marijuana, but I mean, all these drugs that are illegal. I mean, they shouldn't be illegal. I mean, responsible adults should be able to make choices, even bad choices. And if they want to take drugs, well, let them take drugs. I mean, it's not up to another person to try to impose their morality or, on somebody else. So, let's stop trying to do the impossible and free up these cities from all the crime. The other thing we could do is implement a voucher system so that the inner city parents can take their kids out of those horrible government schools where they're just indoctrinated, and maybe they can actually learn something from a private sector, school, and have real competition. But more than that, a lot of the people in the inner cities, what they really need to do is learn a trade. They're not even going to benefit from advanced education. They need to learn a trade. But the best way to learn a trade is not even in the trade school. It's on the job. You want to be a plumber. How do you become a plumber? Get a job and work for a plumber. You want to be a carpenter, work as a carpenter's assistant. You want to be an electrician, work for an electrician. Why don't we have all these people, young people, working for skilled professionals? Well, we got the minimum wage law. We got occupational licensing. We've got payroll taxes. We've got all kinds of laws that make it very difficult for young people to get jobs from older people that have more experience. So get rid of all those labor laws. Get rid of the minimum wage law. All of these barriers to entry that the government has put in the way of young people acquiring marketable skills. Let the government get out of that. We need to break the cycle of welfare and dependency in the inner cities. So so that's an even a bigger a can of worms to open on having to get rid of the welfare state and just in general move away from what we have now back towards a free market system. I mean, the parts of the country that would benefit most from the free market are the inner cities, because capitalism creates wealth, and that's where wealth needs to be created more than any place else is in those cities. But the government stands as a huge roadblock preventing that from happening. So there are a lot of things that need to be done, but unfortunately, none of them are going to get done. In fact, everything the government is doing now is going to make those problems worse.
I know. And I said it to you before. Why don't you, you ran for office before, but it's like hearing you talk, I want you to run again, because so many of the things you say is just like such no-brainer things like no one does. Yeah, and they just keep repeating the same shit.
But the problem is there aren't enough people that have brains that will vote for me. Most of the people don't have brains, and they're going to vote for my opponent who's promising free stuff. and they're going to believe my opponent. Oh, Peter Schiff wants the old people to starve and die. And, I mean, he wants to take away this and take away that, as if the government is actually providing this and that. The government's not providing anything, but unfortunately, the voters don't understand this. And it's hard to really condense my message into a bumper sticker that's going to compete with, free stuff.
But what if
that's the problem.
But what if we all got together? We got like 10,000 people together, 100,000. We each put in $100. We buy you airtime on ABC, which I guess no one really watches, at like 8 p.m. We do a Peter Schiff infomercial that we all support. And it's not called an infomercial because that has a bad connotation. But it's a thing because, like, I mean, you make so much sense. But the same, I mean, do you like the government is giving my county that I live in Michigan before I moved to Puerto Rico? They're giving our county like $400 million. We have a surplus. They don't know how to spend the money, and they can't even They can't even reduce taxes for this whole Corona thing. We have a surplus of $200 million. They're giving us $400 million, and they don't know what to do with it. The city. That's what's going on in Michigan right now. I mean, how crazy is that?
Yeah. Well, again, you have to forget or remember that politicians, they have a job, right? Their job is to get elected. That's what they do for a living, and so that's all they care about, and they care about their own careers in politics and the money they're able to make for themselves pursuing their political careers. And it's not just the salary that they make. I mean, that's a small part of it, but they are able to make a lot of money trading off the influence that they peddle from being in a position of power and being able to share that power with people who pay the money in order to get access to it. So that's what their main concern is. I mean, if their policies, destroy the economies of their cities or their states or their country, well, that's just collateral damage, and they probably justify it by saying, well, if it wasn't me, it'd be somebody else, right? Because if I lose this election, it's just going to be to a bigger crook than me. So, I might as well stay in office because I'm going to steal less than the next guy.
Yep. Yeah. And guys, we're with Peter Schiff, Euro Pacific Asset Management. You go to the site, get his newsletter. I mean, you guys, hearing groupthink is not good. Peter gives a differing opinion and doesn't shy away from saying his opinion. I visited him out in Puerto Rico a couple months ago, and I think we should all move to Puerto Rico. It is no, I mean, like I have the whatever. We're not done yet, but I'm getting closer. Will you tell people what it's like to live in what I call heaven before we know of heaven?
Well, I love it here. I mean, Puerto Rico is a great place to live. It's a great place to raise a family. I mean, obviously there are different parts of the island. I mean, but where I live, I mean, you saw it.
Don't say the name. Don't say the city. I don't want any more prices going up.
I know the real estate prices have probably doubled again since you left.
100%. And you have great, you have great neighbors too. You have great.
It really is. I've never seen anything like it when it comes to real estate. Of course, it's a bubble too. I mean, it's not like I don't recognize the fact that it's a bubble because I'm living in the bubble. In fact, we all refer to this community as the bubble, and we all live in a bubble. And now it's literally a bubble because real estate prices have tripled and quadrupled, and that's not stopping people from making all cash offers sight unseen before they even come here. But yeah, people, now, they start to see what's happening with higher taxes and knowing that this is not the end of it, right? I mean, it's like the tax increases are simply going to beget more tax increases, because what happens is the bigger the government gets and the higher they raise taxes, the worse the economy gets, the more the government spends. And so now they have to raise taxes again. And the taxes that they're raising help to destroy the tax base, meaning that the people who haven't been destroyed have to pay even more, right? I mean, you really see that on a state level where the states raise taxes and then people leave. And now the tax base is smaller. So now they have to jack up taxes even more on the people who remain. And now more of those people go. And then it's like the last person left is stuck paying all the taxes. And then it's a race to get out. And I think that's actually happening too on a national level, except the only place to escape to, unless you're going to renounce your citizenship, is Puerto Rico. And it's surprising to me that, a lot more people aren't already here.
I know. I mean, my wife is the only thing that's slowing this up, but I mean, I think we've hit a point now that she understands. So it's unbelievable there. But Peter, I know you're busy. Your viewpoints, people keep writing in the chat. Please have Peter on weekly. You guys read Peter's books. I'm telling you, I've learned a lot over the years. Read his newsletter. go to Euro Pacific Asset Management, epochfunds.com, EPACFUNDS. And be careful of his pranks, because Spencer Israel here got had. I mean, it was so funny, Peter. Before you came on, he was like, Jason, no, I'm positive. I'm like, Spencer, if I say that, and Luke, will you?
So Spencer did not say he's positive that Peter changed course on Bitcoin. He said he's 200% sure. Whenever you're 200% sure, I mean, you better be really sure.
Well, the people who keep thinking that I'm going to, throw in the towel and just capitulate, right, and buy Bitcoin, they think that what's going to force me to buy it is more people buying it and the price going up. So they think if the bubble just gets big enough that I'll get sucked into it, right? And this is not going to happen. I mean, there are certainly people. I think there is a lot of pressure on Wall Street. They just want to make money, and they jumped on the bandwagon of the .coms. Who do you think was peddling all the subprime mortgages? So the fact that you have these big investment banks that are now participating in the Bitcoin bubble doesn't do anything to validate what it is, because all they care about is making money. They see a bunch of people buying Bitcoin. They see all these companies raising money, going public, operating in the Bitcoin space, and they need to get in on it. They don't give a damn that it's going to end in tears. They don't care. Remember, hey, if the music is playing, we got to dance. We got no choice. And so that's what's going on. But don't be fooled into thinking that somehow these guys are validating this concept. They're just trying to make money. And they're afraid that if they don't do it, one of their competitors will. And so they're in there. They're going to give the public exactly what the public wants until the public is broke, right? That's their history. And now, you have some companies. Well, there was one company that came out today, that said, oh, we're going to put Bitcoin on our balance sheet. I mean, that's like the new, .com to your name. Whenever your company is in trouble and you're losing money, the Hail Mary is, well, we'll just buy some Bitcoin. And then it can keep going up, and people will, pay attention to the paper profits in our Bitcoin, and they'll ignore the fact that our business is lousy. And maybe our stock price will just go up with Bitcoin instead of down with our business. But, all this is predicated on nobody selling. I mean, what good is it to have an asset that you can't use? I mean, the only reason Bitcoin hasn't crashed is because people aren't selling. Now, there are some people selling. Some of the people buying houses here in Puerto Rico, they're doing it by cashing in Bitcoin. So that's part of what's fueling the bubble. And one of the reasons that prices are so high is these Bitcoins got all this cash. As long as they sell, they can have cash. But the reason they can sell is because hardly anybody else is, because they all think they're going to get rich, but they're holding nothing. But eventually people are going to want to turn that nothing into something. And that's when it all evaporates. That's when all the paper profits go to money heaven.
Cut that as a clip. Put that out. That clip for the last 2 minutes. That rendition. Cut that. That's it. Put it to the reel. Peter, thank you for coming on. We got to have you on more often. Awesome. Absolutely awesome segment. If you joined this late, you guys got to literally go back and listen to this.
Wait, Peter, I got one more question for you if you have one more minute.
Oh, you've been dying to ask, Aaron. I know.
Yeah,
it better be good, because you've hit me. It better be good, Aaron.
How's it going? I'm Aaron. I'm the one that was messaging you on Twitter. So this is kind of a macro question. So a lot of economists have been calling for, obviously a lot of inflation coming with all the money printing. But when you look at the CPI, we haven't seen a huge increase in that as far as just consumer goods. Like you go to the store, a loaf of bread is still similarly priced to what it was pre-COVID before we did all this money printing. Are you expecting that to rise, or is there a reason why we've seen certain asset prices such as lumber, real estate really inflate, but not the CPI?
I don't know where you're shopping, but I think that the prices that you're seeing in the markets are higher than they were. So you got to look at the actual prices of what you're buying, not what the government claims is happening to the prices of what you're buying, because nobody can buy the CPI, right? You have to actually go to the grocery store and buy the food that's on the shelves. And so what matters is what that food actually costs, not what the government claims it costs after they calculate the CPI, because those numbers are meaningless. And of course, it's all by design. I mean, the government does not want to report a high inflation rate, because all sorts of bad things happen once they have to admit that. So what they want to do is find a way to mask how bad inflation is so they don't have to do anything about it. And that's what's going on. And now, of course, the Federal Reserve, its key word is, don't worry about it, it's transitory. Yes, prices are going up, but don't worry, they're not going to stay up. I mean, how do they know? And why would they not? With all the money they're printing, everything that's happening suggests that the only thing that's transitory is we're transitioning into very high inflation. And the price increases that we see today will not only be reversed tomorrow, but they will accelerate. That the gains in 2022 are actually going to be bigger than the gains in 2021. And then the gains in 2023 will be bigger. The whole curve is going to be accelerating. And I don't even know if the Fed will ever be able to admit that it's not transitory, because if the Fed admits that inflation is permanent, well, then what does it do? Because it can't do anything about it. I mean, not unless it's willing to crash the stock market, crash the real estate market, bankrupt the U.S. government, not only force the U.S. government to abandon any future stimulus, but to take back the existing and past stimulus and maybe even default on its bonds. So there's no way that the government can admit there's an inflation problem because they can't cure it. So they deny it. But people aren't going to live in denial. And I think what's going to start to happen, maybe even before the end of the year, is when people go to the supermarket, they're not going to just buy what they need for the week. They're going to buy what they need for the year, maybe 2 years. They're going to buy stuff that doesn't perish, right? Things that they know they're going to need, and not just supermarket and all sorts of stores. Americans are going to build up their own inventory of stuff, right? Because if they wait, this stuff is going to cost a hell of a lot more. I mean, you can make a better return buying your toiletries that you're going to need next year and in 2 years and 3 years. Buy them now. I mean, you know you're going to use them. And if they're going to be 10%, 20%, 50%, 100% more expensive in a few years, why buy them in a few years? Buy them right now. It's a guaranteed return as long as you got space to store the stuff. And, worst case, maybe you don't even need the deodorant yourself, but your neighbor might, and you could trade it for something that you forgot to buy that he might have. But look, prices are going to go up. So shortages are going to result. All this stuff is going to happen. It's not transitory at all. And this whole inflation psychology is going to take hold, because when people recognize how much more expensive things are going to be in the future, they're not going to wait for the future to buy them. They're going to buy them right now. But then, of course, the sellers, they're not going to want to sell stuff today that's going to be more valuable tomorrow. That's where you'll start to find it difficult to buy things. But the same thing is going to happen with foreigners who are holding dollars. They're about to run from the dollar. I mean, once people realize that the dollar is going to go down, why ride it down? Get out now. Preserve your purchasing power while you can. I mean, there is a run that is going to start on the dollar. I mean, right now we're kind of like the lull before the storm, but it is coming, and you need to get out ahead of that. But when the dollar really starts to crash, that's what's going to accelerate the increase in consumer prices, which will be much more pronounced than it already is. And at some point, the government won't be able to hide it, beneath those phony statistics.
Got it. Yeah, I was just curious if you kind of saw those CPI rates as legitimate, which it sounds like you don't. So
they're never legitimate. It's like, look, would you expect the mafia to put out a legitimate survey on crime? If the police hire the mafia, they say, hey, we're wondering if we need more cops in this community. Can you do this survey of crime, and so we know if we need more police? What do you think they're going to say? Hey, there's no crime at all. In fact, you don't even need the police you've got. You could fire a few. Everything is great. Of course. So, the government is the fox guarding the hen house. I mean,
Well, I appreciate you answering my last question. That was one I just was curious about. I've been, worried about that inflation. So it's good to hear your point of view.
All right.
Yeah, remember the Federal Reserve said subprime was contained. That was their big word. Hey, don't worry about subprime. It's contained. Right? Now they're saying the same thing about inflation. Don't worry, it's transitory. Right? Transitory is going to be the big word that they're going to have to eat. When we end up with massive inflation.
Got it.
That is protracted, ingrained, and is going to be a permanent part of the American experience for I don't know how many years or decades. We're going to have to get used to living in high inflation.
Well, I love it. We might have to put out a nice little clip of that one too. So we've got two good clips here.
And remember, when you have a high inflationary economy, you don't have the reserve currency. So we're going to have to live in an environment where we no longer print the reserve currency, which means our standard of living is going to plunge because our consumption is going to be limited to our production and our borrowing is going to be limited to our savings. And so it's a whole new world that Americans are going to soon be waking up in.
Well, it's a lot of stuff going on. It'll be interesting to watch. Thank you again for joining us today.
All right.
And like in the comments said, we got to get you on more often, maybe once every 2 weeks or so.
All right, Peter.
All right,
I hope I see you in the D very soon, or Puerto Rico, that little bubble that we talk about. So hope to see you there.
Right.
All right. Thanks again. Yeah, appreciate it.
Bye.
Guys, he's awesome.
Yes.
Yeah, he's awesome. So many quotable lines. That was fucking awesome. Sorry for the language, but loved it.
We got to get straight to our next guest, though. And then we also, Jason, you can hop if you want to start getting ready for the clubhouse. Jason's got a big clubhouse coming up with Smile Direct Club CFO, Kyle Wallace. So at 1:00 on Clubhouse, once this ends, hop over there.
That's at 1:00?
Yep.
Oh, good. You tell me. Thanks.
Yep.
Boom. How about that? All right.
All right. And then one more thing. If you guys are a Robinhood user, send an email to Robinhood or contact us. Say, I want my Benzinga news. It's the best. And then email powerhour@benzinga.com and say, Aaron Thomas, you don't have to say his name. Send me my swag. Give your size, give your address. He'll send you a jacket, a shirt this week. No more, hey, I didn't get my swag yet.
This
no more.
week, it's going.
If Aaron Thomas, if you guys don't get your swag, you tell us, because Aaron Thomas will send it this week. All right. We need your help with Robinhood. Okay. I'm asking, we need 10 people to reach out. I want 10 emails today. You'll get jacket, shirt just today.
We need Benzinga news on Robinhood.
We need more Benzinga news. We love Benzinga on Robinhood. Okay. And then Steve Delaney, you are the man. He's been pushing us at E-Trade. Steve Delaney, you'll get whatever swag you want. Wherever your name is up here, I saw it. You've been pushing. I've seen it. So thank you guys. Luke and Aaron Bree, you take it away for the special next guest. Bring the energy, slam the like, and let's have fun, because you got David coming up, and I'm out of here because I got to go on Clubhouse and host the CFO Smile Direct announcing the earnings. Peace out.
Boom. There we go. Boom. All right, guys, we're keeping the trend going that we were talking about yesterday. Yesterday, we were talking about the car market, especially used car parts, that sort of thing. We could not have a better guest on with us today other than David, COO, carparts.com, out with earnings. And let's keep the general industry discussion going, too. I think we all think it's a very interesting space here, David. But what's up? Welcome back to the Power Hour. How are you doing today, sir?
Thanks for having me, guys. It's great to be here.
Absolutely. That's an awesome wall and plant. Like your whole setup is awesome.
I got a whole professional setup for sure. Yeah.
Yeah, it's great. Top notch. And all right. So we met your CEO of carparts.com. We're going to dig into the earnings report that you guys put out. We're also going to talk about the car market in general, car parts, used cars, that whole sort of thing. Because I think there's a really interesting trade to be had there, especially off the heels of the last interview that we did. We were talking about inflation and rising prices and that sort of thing. But before we dive into all that, David, could you just give us a little bit of background on the business for anybody who isn't familiar?
Of course, yeah. So carparts.com is an online retailer. We sell tools and parts to get customers back on the road. We've been around for 25 years. 95% of our business is online. Today we have 2,000 employees. And our sales for trailing 12 months are about $500 million. So we're a legit company, guys.
There you go. Legit company. That's the takeaway. No. So all right. You guys had announced earnings yesterday. Let me get my screen share going here so I can throw the numbers up. But basically, in short, while I'm pulling this up, I'm just going to cut straight to it. You put up some awesome sales numbers. I think the number was you had $144 million of revenue versus $117 million estimate. I mean, my trusty Benzinga Pro. Yeah, there we go. Who nailed that? $144 million of sales versus the $117 million estimate. I mean, can you talk to us about these numbers? I mean, it's a big quarter. The quarter before that, you guys did $119 million. What's driving that? What went into the success, et cetera?
Yeah, for sure. Monster quarter, 65% up year over year. Biggest quarter in company's history. It's the 5th consecutive quarter of year-over-year growth. What's driving it is execution. The last 2.5 years, we've been going through a massive transformation, tons of investment in talent, in technology, in marketing, supply chain. We've opened up 3 distribution centers. That's kind of the oxygen is our supply chain and our inventory, and we're going all in on that. And that's what's driving it.
Okay. Awesome. And then like, can we talk about the market as a whole as well?
Absolutely.
The market, per my understanding, has been red hot. Would you agree with that?
Yeah, of course. Yes.
And when I talk about the market, I'm talking about both car parts and used cars.
Yeah, absolutely. And what's driving it is, the number of cars on the road is increasing every year, about 300 million cars. The average age of a car on the road is actually 12 years old. And our sweet spot is 8 to 15 years old. So we're right in there. What's interesting about our business is that it's grossly underpenetrated online. It's a 300 or $400 billion market, but only 3 or 4% of the purchases are made online. So you compare that to furniture or pet food, like we're in low single digits. So it's a huge opportunity.
Yeah, I think that's definitely interesting. And for this market strength, it seems like it's less of you're saying it's less of like a one time, here's a phenomena that's happening, and more of this is just a market that's going to grow significantly over time. Or are there some like that right now in particular is unusual type items going on?
No, definitely not one time. I think what we're doing is very different from other players. We source premium parts. We bring them into our distribution centers. We ship them directly to the customer. A lot of players out there are, marketplaces. We're not. We're a supply chain company too. A lot of investment in the business. Again, technology, marketing, people, supply chain. Definitely not one time. It's PRTS to the moon, man.
All right, there we go. All right, that's the clip from this one. Really awesome question out of the chat. And guys in the chat, if you have more questions, let me know. I'll ask David. But question out of the chat: chip shortage. Is that affecting you guys at all? Will it affect you guys at all, etc.?
It's going to help. Less new cars are being sold, more used cars. The cars are trading hands, staying on the road longer. Our sweet spot is cars that are, again, 8 to 15 years old. So for us, it's a tailwind.
Okay, and then I want to talk about prices as well. Right, we've had a few guests on from various businesses that have talked about, hey, prices are increasing. This is good for us. General inflation type commentary. Is that true in your business as well? Has there been increase in prices of the car parts?
Yeah, I think it's true in every business. And I was listening to Peter, and I've been following Peter for a long time. Very smart guy. I'm not as educated as he is on the inflation stuff, but yeah, prices have been going up. I think for us, auto parts retailers historically have had an easier way of absorbing inflation. We see it in our business. The way we set up our pricing, it's dynamic, it's in real time, so we can adjust and pivot as new information comes in. But I think it's impacting every retailer out there.
Okay. Excellent. I want to go back to the company specifically for a second here. You had that monster quarter, the $144 million of revenue, 65% year-over-year growth. In the press release, you guys had some commentary about Texas, right? You talked about the warehouse that you guys have in Texas. Was part of the sales growth that you guys experienced in the past quarter due to some of that crazy weather that happened in Texas, southern United States, or is it just the matter of you're building out more supply chain there, et cetera?
Yeah, I think it's a combination of both. In the short term, the weather doesn't really help. In the long term, you have deferred maintenance, you have more accidents, more collision, mechanical parts fail. So short term, it's hard. In Texas, we can't ship because it was under snow. Long term, it definitely helps. Now, as far as the growth, the supply chain, that helps a lot. It's more inventory on hand, more capacity, more demand we can capture. So yeah, the bulk of it is these investments are paying off. We made a lot of investments last year, and it's good to see them pay off so quickly and in such a big way.
Awesome. And then looking at this past quarter again, what's something that surprised you, either for the market as a whole or within your business, positive or negative surprise? What's just something that, okay, wow, this is interesting, that this isn't something we were expecting?
Yeah, what's surprising me right now is the volatility in tech stocks. You know, I try not to look at my ticker symbol too much, but goes up and down, like a lot of other companies. You know, what I'm excited about is the dramatic shift of offline to online. You know, we saw it in every single industry. We haven't seen it a lot in auto parts, and now it's happening. And it's happening because we're leading the way. We're doing something very unique. So historically, you used to go to an AutoZone or Advanced Auto Parts because you didn't have any other options. Now you got carparts.com. So
okay, there you go. Boom. And let's pick up on this idea of you know, tech stocks that you're talking about. You know, I would say just look at high level numbers. You guys aren't valued like a high flying tech stock. You know, like a lot of these names that we see out there. Why do you think that disconnect exists in the market? And, you know, is there anything that you guys are working on which you think will change how the market perceives you?
yeah, that's a good question. I think, yeah, you're right on that. I think our consensus for next year is called 530 million. So we're definitely not trading like a big tech stock. You know, 1.2, 1.3 times sales.
Exactly. Yep.
I think, you know, we have a history as a company. We've been around for 25 years. You know, we're starting now to execute 5 consecutive quarters of growth, 5 consecutive quarters of solid margin, some solid gross profit dollars, some investment in the business. Sometimes it just takes time for the market to absorb all that information. But in my personal opinion, I think it's coming.
Okay, and let me ask you one more question. Next for the quarter that we're in now, or the quarter after that, like a Q2, Q3, what is it that you guys are working on that investors should be most excited about?
I think, yeah, we're continuing the blocking and tackling, more investments in technology, more investments in user experience, and more supply chain expansion. Again, we're taking the space next door in Texas. So our Texas facility, which is a big one already, is going to be even bigger, more inventory. And I think the other thing is brand awareness. You know, we've been in the business for 25 years. We still don't have that name recognition that some of the big players have in other industries. So NASCAR sponsorship, Professional Fight League, YouTube, like a lot of the things that we're doing. We got a national TV campaign with Daytona 500 winner Michael McDowell. So a lot of things on the marketing side that we just haven't done before, and we're just getting started.
Okay, yeah, and you need a song. Like yesterday. So we talked about your stock yesterday, and we talked about the market as a whole yesterday. We got to O'Reilly's and it O'Reilly. I can't help myself. It got stuck in my head the rest of the day. It got stuck in everybody else's. So if you want a jingle, you need help with a jingle, just give me a call, you know, and I'll help you write one.
Yes. Sorry, I just got nauseous a little bit, but
yes.
Yes, maybe we'll work on that.
Boom. All right, that's the way to end it. David, I appreciate you coming on with us. Congratulations on the huge quarter. You're one of the only stocks that has like a .com or a tech type name that's up today. Again, 144 million of sales versus 117 million estimate. Second time on the Power Hour hanging out with us. I appreciate you coming and joining us.
Thanks, guys. PRTS to the moon.
All right, there we go. PRTS to the moon. Boom. All right. How was that, guys? There we go. I appreciate you all coming and hanging out with us. That is bringing our hour to a close. Hit that like button. Subscribe to the stream if you're new. Some interesting companies there. The PRTS, if you thought that interview was interesting, if you think the stock is interesting, stay tuned. We're going to dig into that one tomorrow. This is the second time now that I've talked to David on this show. I really do think it's an interesting business. We just on Monday, we were talking about car parts. You were talking about used vehicles as a whole. You know, I think it's time to pick some names here, especially yesterday. We did that portfolio clearing. So tomorrow we're going to go through all the stocks that we sold on Monday, all the stocks that we held on Monday and are still a part of the portfolio that we look at every single day on the show. So we're going to do that. We're going to dig into, you know, so the carparts.com, some of these other auto stocks. And then the one thing that I will say too, guys, PLTR, all of you Palantir bag holders out there, you're finally having a day. Check this out. Boom. You're having a good day, Palantir bag holders. 7% on a shitty market day. It's a bad market day. It's a bad market day. And we're going to sing the O'Reilly jingle tomorrow too. We need to move the light up so it's not reflecting in the window. Okay. Yeah, that's a good point. But we'll make that happen for tomorrow. But all right, guys, congratulations, Palantir shareholders. Hope you enjoyed Peter Schiff. Hope you enjoyed carparts.com. we are going to get rocking and rolling. Let's make it a hell of a trading day. Let's make the most of this sort of tough day, this tough week that we're having. Go ahead, follow me on Twitter at Luke Jacobi, Jacobi, and I will see you all tomorrow, and we'll talk some more trade ideas.